right, thank you. I noticed we had two little chairs, so I'm going to take this one, the crappiest, so my dear panel members can have the good chairs. Guys, please join the stage. Grab a microphone. On the way. So I understand we're a bit over time, so please manage my time. I'll try to keep to 20 minutes, which is not much for a panel, which also means that I'm going to give 3 rules to you guys, which is it's 20 minutes only, so we try to keep it educative but short and to the point. I also would like to spice it up a bit, so disagree as much as you can and don't repeat too much. So let's use those 20 minutes. As I understand the audience, there should be mostly entrepreneurs or people who are interested in entrepreneurship. So also the focus on the panel of like what VCs are looking for. I think we should start a bit with what that means for startups. Before we do this, I would like to give our panel members a quick round of introductions, very short. Maybe start with Max.
Yeah, hi everyone. My name is Max. I'm in the startup business for a number of years. Sold a company, then I was involved in launching an accelerator here in this region. The last year and a half, I'm mostly involved with personal investments and working on a pretty cool VC fund, which you're going to hear more about pretty soon.
I'm Anna Degtyaryova, CEO and founder Happy Farm Business Incubator. We're based in Ukraine and Kiev, and now we have 41 amazing startup companies, and I think the best of the best board members and board advisors all over the world.
My name is Vera Shokina. I'm a managing director for Silicon Valley Bank. This is the international bank focusing on venture capital and private services industry and their portfolio companies. I'm also a partner with Runa Capital, $135 million Russia-related funds.
Hello, my name is Daniel Tomov. I'm a partner at 11. We are probably the most active investor in Central Eastern Europe. And I myself been around startups as an entrepreneur and investor for the last more than 10 years.
All right. Okay, so when we think about like what VCs want, so what are the things startups should know? I mean, I think everybody knows VCs are looking for the teams, traction and the standard things. So I'd like to make it a bit more specific. Can you give examples to the audience of what are you looking for? So maybe start with Max again.
Focus on execution. I think that's one of the most difficult things to validate. My own experience, especially with regions that are culturally, let's say the way they are, a place like Eastern Europe, you never really know whether a team is able to execute until they're actually facing a challenge. So until they're negotiating with a large company, until they're somewhere where it's really hard for them, usually a different geography, you don't really know whether they can execute. And that's one of those really tough things that you can't really crack. As the British say, the proof of the pudding is in the eating, and it's very often like that with startups, investing in them.
Cool. Okay, as I understand, this is 3 things. First, great team, great technology, and passion.
All right, Vera.
At Runa, I think we were looking for the startups that had the global perspective and have the ability to scale around the world and enter US markets more than anything. So we like the company that are heavy in IP and also focused in companies that are in education and fintech. So those are the companies that we looked for.
All right.
We have very early stage investors, so we invest in most of the case in pre-product companies. So we mainly bet on the teams, and we spend time with them in order to see how they progress and what's their capability to execute. But initially we start always with betting on the teams.
All right, so whenever I'm in the panel, I get these answers, yeah? And these are not the answers I'm looking for. So what I'm looking for is, can you give the audience specific examples of, so let me give you something very specific. When I'm looking at teams, everybody knows it's about great teams. We all know, okay, they should have a background, entrepreneurship ideally, industry experience, the different roles, I mean, engineer, designer, business, depending on the business. But for instance, when you apply to an accelerator, or when you're at the interview at the VC, and one thing that often founders don't know is, for an accelerator, you submit videos and asking, what are the videos for? Often you have to explain your product, you might have to explain the team, but what we're looking for often is also the chemistry between the founders. So we're looking at the video and we're looking at how do the founders engage? What's the vibe we're getting? How long do they know each other? These small details. And why do we look at this? We look at this because we want to have an indication of what's the risk profile of the team breaking up. If a team just got together, the risk profile of the team breaking up is much, much higher than a team that already has worked together for 10 years. But also, there's a good vibe, there's good energy, they engage, and you just know that there's chemistry between the founders. So these kind of examples, can you guys give me some examples?
Can I add something to that? So something that's actually very true, but something that I have seen as well in this neck of the wood is kind of the opposite situation where you have people that know each other for a very long time. I mean, I've seen applications where people go like, yeah, we are, out of the 25 years that we're alive, we've known each other for 20 years. And to be honest, that's also not always, it's not always an indicator of success, right? So it depends, right? I think that Vitaly, actually, who was on the big stage earlier today, he said it very well when he said that what you want to figure out is whether people can commit to it full time, or they're going to be hedging their bets, between different activities, and that's something that I would, focus on mostly when most when I look at stuff.
Commitment, Daniel.
I mean, when you spend a lot of time with founders, you start to feel it. You have intuition for that, whether it's the passion. We always also look for a dream, whether they really dream, or they come just to say, okay, I have a product, it does that and that. And you look for this extra, whether they really dream about this and how they see themselves as doing something great for their customers. And a very good example was we had I do remember one of our first investments at 11 was in a team. One of the guys was a co-founder in a leading company in the indoor climbing walls, and the other guy was an industrial designer, and they came and said, we have a very good idea, and the name of our startup is Surprise. They changed it since then, but they just made a drawing, but by the way they talked about this whole product, their vision, what they want to do, I mean, you say, wow, I mean, I want to invest in this team. And they're doing really, really great now. So it's really, you build an intuition about all these founders. And sometimes it's very difficult to verbalize all of these qualities that you're looking at.
Yeah, and I wanted to build a little bit on your guys' earlier comments about connecting with the VC. I think it's very important to do the due diligence on the VC and really understand where the partner who you are talking with is in his role and where the fund itself, at what stage it is. Just give you the example. You need to understand when you look at the funds whom you want to send your business plans, I think it's important to understand what is the vintage year of that fund, right? So when this fund was created. Let's say if the fund is the first year since it's raised capital or fundraising right now, this is a very good scenario, because if you look at 10 years life of the fund, most of the investments happen in the first 2 years, 2-3 years. So the probability of success with the fund that just finished the fundraising or maybe doing like second or third closing is much, much higher, because this fund will make 10 investments this year, while the fund that's in 7th or 8th year, there is like absolutely no way you can get funding from that fund. They'll be still in the market, they'll be still doing some PR, they'll be talking in the conferences, but it's whatever capital they have, it's basically in the reserves for the existing portfolio, and there's no way you can, even if the business plan is ideal and the team is great and the company has all the right things, behind the front in the VC fund, the partners basically spend all the time managing the portfolio and potentially fundraising for the next fund. So they will be probably spending very little time on the marketing activity and definitely not looking for new opportunities. I think it's also very important that you look within the fund. You need to do due diligence in terms of maybe the specific fund already has an investment in the sector where you are investing. So there is a conflict of interest. You will probably just share a lot of information with the partner, and the reason he took the meeting with you is more for just knowledge accumulation so he can help his other investment. You just really need to prepare for the meeting.
So maybe to summarize, so for the entrepreneurs in the audience, what would be the few questions that they should ask to the investors? So you mentioned the fund cycle, for instance. You mentioned, okay, so what stage in the fund are you at?
Well, I wouldn't be even asking those questions at the meeting. This information is available on internet, so you need to always go through qualified introduction. You need to always check that the fund is earlier after it did the fundraising. You need to check that there is no conflict of interest, and you need to go to the partner that focuses on investment. So don't go to the to the guy who does cloud computing if you're a fintech company. He'll have to do reintroduction, and you'll lose one step, and it's not good for you, basically.
All right. Anyone else? Like Daniel, did you want to add something or not?
I just wanted to add something. Yeah, you need a lot of preparation when you go to VCs. We see it from our companies, from our previous experience. But I would like to say something that what I see in the last several years is that, and especially in the past, is that still European VCs do behave as private equity. So they're constantly looking to protect their downside rather than optimizing their upside. So they look at startups or early stage companies and they say, but you have to, and they do evaluate them as a private equity case. They do talk about EBITDA and all these metrics. And I think they should change, because what you say is really very valid. And when you know how few are the VCs around in Europe, I mean it's a great luck to be in the right moment for a particular VC. So actually, I mean, they should start doing what accelerators are doing. So they should have a small percentage of their portfolio that they should invest in a larger amount of companies, and again follow the same strategy. Because otherwise, with 10 companies or 15 companies in a portfolio, they'll always be conservative, because the liquidity is so low, and it continues to be so low. So actually, they are trying from the very beginning to think, okay, to whom we could sell this company. So they are trying to sell before they buy.
Okay. So maybe also like another thing is, what often I think entrepreneurs don't realize is, when you're fundraising, entrepreneurs assume that both the entrepreneur and the investor want to close the deal as fast as possible. But actually, an investor has an invested interest to delay this process, because it gives him or her the opportunity to kind of look your traction, to have longer time to actually evaluate you. And if there's no pressure in terms of other investors coming in, then the investor doesn't have the incentive to invest very fast. So it's something to know as an entrepreneur, to see that how you're going to play this game. Another topic, so maybe Max, personally. So what are you looking for in startups? We already discussed the criteria, but if you look in the type of businesses that are interesting, the trends, I mean, what is interesting to you?
I'm personally agnostic, so I'm looking at technology and scalable products. It's something that can make a big enough dent globally. That's more or less the interesting stuff. In terms of which technologies, it's hard to say. Like, one of the definitely most exciting companies that I know now in the Balkan region, where I'm most of the time, is an electric mobility company. They're doing really awesome. There are a couple of really cool business-to-business software solutions, more and more connected hardware startups. What is really important is to figure out whether that team can take it to a next level, whether it's a technologically sound product, and whether there's a team with a vision and a drive and the ability and readiness to break stuff, to make a lot of people angry and to actually get out there and get to the next level, get to markets. If a company fits all of those criteria, I'm a very happy guy.
Anna.
For us, very important technology and a team, because a team, I think it's more important, and the team should be ready, working hard, and make a pivot again, again, and again, and working hard. This is like the most important, yeah, working hard 24/7, every day, every night, everywhere, and forgot about, I don't know, private life, about girlfriend, about parents, friends, about everywhere, just work. Just startup, just a business.
Does any of you have like specific angles, niches, technologies you're extremely excited about? So to give you an example, in 2007, by far the most like investor trend is social. So social, I mean, all investors were jumping on social. There's a massive amount of money poured into social. Only a few years later, I think it was by 2012, if you compare the stats, that it completely shifted. So like social like dropped from place 1 to, I think it was 5. SaaS, cloud, analytics, big data, all this stuff is dominating the charts. So in terms of trends, maybe specific technology, what are you guys excited?
We're looking at hardware and of course connected devices, but also SaaS and enterprise to a great extent, because also this is the fields in which we could help most. So that's why we try to see, apart from the money, how else we could help our startups.
All right.
May I add? Sorry.
Yeah, of course.
I think like the next big thing, this is new money, because we had
Cryptocurrencies.
gold, we had like paper money, and next one, this is bitcoins, maybe.
So peer-to-peer currency, essentially, whether it's Bitcoin or something else.
The technology, right? So the cryptocurrency as a technology is really, really interesting. So obviously you have all those different currencies, and investing in the currencies isn't really, well, that's not something we should do as people who make technological bets. But definitely the various, if you look at all the opportunities that are coming up with solutions based on cryptocurrencies, various cryptocurrencies, that's pretty amazing stuff.
And that's maybe probably just part of the big trend in fintech. I think banks in general are very conservative, and I think they waited to really innovate. And right now, I think they really understand, banks and financial companies, that this probably, pretty much every big bank right now have a special team focusing on the innovation and looking for the new solutions, starting from payments and merchant services, and opening the code to the developers so they can help build their platform, helping to do the user interface that's a lot more flexible and friendly. Mobile is a whole big story in banking. So I think in fintech, and I think that's led mostly by London and then Silicon Valley, even I think a little behind, but this is a huge ton of innovation happening. I think a lot of investors are very interested in this space right now.
Okay. So yes, to wrap it up, I want to address also some other topic as accelerators moving up the value chain, VCs moving down. But in interest of time, and also so we can attend the startup competition, I'm going to wrap it up. So with that in mind, maybe just a last round, just from a VC accelerator perspective, a piece of advice for the audience. Maybe we can start with Daniel at the back.
Advice to whom?
So for raising money, if there's one advice that you would give the entrepreneur, what would it be? And an example or something specific would be great.
For me, it will be have a dream and show capability, demonstrate the capability that you could execute on this dream. This works for everybody.
Okay, if you would like to raise money, you should be ready to answer first. What is your problem? Who is your audience? Make great speech and, I don't know, awesome presentation. That's all. And where is the money? The main question is, where is the money?
I was going to come back. And one more thing for me is know what your investor can do for you. Know what kind of doors you can open. I made that mistake in my first company. I'll never forget how I signed the first check into my first company, which was $100K from a bunch of angels. And those guys, really nice guys, but they absolutely couldn't do anything for my company. So know what your investors can do for you. Know what kind of doors they can open, know what kind of mistakes they can help you avoid. That's the hardest thing. You know, in the end of the day, if someone hasn't been through what you're going through as an entrepreneur, it's a big question whether you should actually take money from them. So think about that.
Yes, and I think I agree, with the comment about the big dream, but I think it's also very important to have a very methodical plan. And for example, if you have the investor next door who offers you some money, I think you should take it and get you to the next level. And then once you're at the next level, you evaluate and incremental steps. I think execution of those incremental steps to get to your big dream, I think it's also very, very important.
Okay. Because it wasn't mentioned, even though it sounds generic, I'm still going to wrap it up by saying, if there's one thing that you should show the investor is that you understand the customer. I think that's it. I mean, explain in a simple way, of course, but show the VC that you understand the customer, and there's no better way to show VC that you understand the customer than to show traction, if you can. So with this in mind, please give a big hand to my panelists. And thank you. Let's see the starter pitches.
Thanks, Mike. Thanks all.